Hello. Hello, hello. Good morning, everyone. All right, good morning, fellows. Let me introduce a little bit about myself. I've been a professional trader and a licensed technical analyst since 2008. My strength is combining day trading, swing trading, and portfolio management into my own unique top-down approach to the markets. But unfortunately, even until today, I still don't hold a secret key to the financial markets. However, I've discovered my sweet spot in trading, and I'm aiming to help you find yours. I want to offer you value, trading guides, and strategies, and the mindset that will help you become a successful trader. And I've trained traders all around the world. No matter if you are a beginner trader or a seasoned technician looking for new trading and investing ideas, well, you are in the right place. All right, let me see. Welcome, Oliver and Musk Trading, Lily and Adfield. Good morning. The sound is a bit low. Let me adjust it a bit. How about now? Is everything sounded all right now? Okay, welcome, Michael. Today I'm gonna mainly focus on gold trading strategies, as well as if you do have any stocks that would like to be discussed by me, you're welcome to leave the name of the stock in the chat session. I will definitely go through everything that you have asked and try to solve your issue. Right. There are some questions that I would like to talk about with you today. The first question is, why are some people not as capable as you in trading, but they can make money? The second question is, why do you lose money on the same trend where some good traders make more money than you? And the third one would be trading the same thing at the same time. Why do other people make money and you lose money? Those questions probably happened a lot of times while you are trading, especially when you are experiencing a series of losses. Personally speaking, I do ask myself these questions quite often as well. Okay, so the answer that I have discovered is because most people do not generate pre-market analysis. They do not make a good trading plan before the market opens, which would be leading to the trading losses. Well, since you know the answer now, it doesn't matter with our daily pre-market live stream, you can advance layout, make a trading plan every single day before the market opens, and then just follow your trading plan. That's all you need to do in the future. It sounds quite easy, but it's quite hard for every single trader to hold this plan every single day. Right, good morning, Freedom Zaki. And please feel free to leave your questions in that chat session if you do have one. Otherwise, I'll just stick on my own original plan to talk more about our gold trading strategies. Yes, Lily. I definitely know the feeling that some traders never make their trading plan before the market opens. Because if you do not make a plan, then theoretically you're probably gonna set up your stop loss level and take profit level in your mind while you are trading. But let's say if the price hit your stop loss level, and quite often that you would think the price just hit this level by accident. Probably I'll just hold a little bit longer so that to wait the price to retrace, and then most of the time what is gonna happen is your losses will be bigger and bigger. Then finally your trading account will be ended up with 0. Good morning, Amory. Yes, Oliver, I can see that you have your own point on making plans. The secret is making plan is just the first step, and the second thing and the most important thing is you have to stick with your plans. I can definitely give you a recommendation that probably you can set up your stop loss level and take profit level right after you entered your position, and then close your trading platform and do not look at it until tomorrow, so that the system will automatically either takes profit for you or takes the loss for you. There will be no emotional trading that is involved in this trading. Let's see how it goes. Probably this will help you to avoid this kind of mistake. All right. No worries, Oliver. Give it a try and see how it goes. All right, let's kick it off for today's session. Today I'm gonna mainly focus on gold trading strategies. Let's take a quick look at the daily chart of GLD first. I hope everyone can see my screen right now. So this is the daily chart for GLD. And they are my indicators and my support levels and resistance levels right in the middle of my screen. All right, let me draw several lines to indicate more clearer, I'm probably gonna go for a path. The path is more like these. Okay. The path that I just drew is what happened from November 22nd last year. From the very end, from the very lowest point, it was 150, and the current price of GLD is 100 and it's nearly 189, which is up for about 30% to 25% to 30%. That is a big move for GLD because usually GLD, let's see here, there is a long term of consolidation. The consolidation can take as long as half year to 1 or even 2 years. To compare with the trend from last year until today, that is clearly a big movement. And then, since we have a big picture right now, it is a upwards trend, then our trading strategies for either short term or middle term would be a long buying rather than short selling. After that, I would draw several lines to remind me of there are some critical levels. For example, there is one here that I just determined. There is another line here which looks quite important to me as well, because look at the price action. Look at here, the price bounced off after the price tries to break it through but failed here as well, this area, and here as well. Finally, this particular line switched from a support line to a resistance, from a support line here to a resistance line here, and then it moved back to support line here again. This is very critical for me, at least. There is another line which is at the very top of this chart, which is drawn by a red color. That is our newly resistance line. With this line, it is gonna be our short-term target if we try to long our gold, our GLD underlying asset. That is the daily analysis for GLD right now. Let's see if you guys have any questions here. Yes. How about day traders? Still long? In my opinion, the longing trend is still there. Although this resistance line looks like a bit strong, but in the meantime, the support area here is also quite strong as well. As long as the price of gold do not break through this level, which is 184, we stay bullish for GLD on a daily basis. All right, let's switch to 4 hours to see how it goes. look at the consolidation area here. It started from 23rd of April and it ended on 23rd of May, which stayed for 1 month. There is a quite interesting pattern that I would like to trade, is the trade after consolidation. Because take an example of here. The length of this consolidation was 1 month. In this month, I probably failed so many short-term trades because it is a consolidation, but my personal strength is a trending trades. But right after this consolidation, especially when the price broke through this particular level, I entered my long position here. And when it pulls back, but the price did not hold at this area, I just increased my lot size, which gave me an opportunity to gain this kind of area of profits. So although I exit my longing position at this kind of area, it doesn't mean I am negative on gold right now. It just means that I think the price of gold rose up so quickly that the price needs a pullback or a kind of retracement for the market to slow down a bit. After that, the market will regain its strength to rise up again. So, at the current stage, since the price stays above this purple line, which is, as you can see here, is 30 EMA, I still stay bullish on these areas. And I am trying to establish my longing positions for the past several days as well. Let's see how it goes in the future. So my current plan is I will reduce my lot size when the price hit this level, which is 190, and see how the price action would be. If it breaks through straight away, then I'm probably gonna enter more position, or I will wait until there is a pullback. Let me draw an arrow so the price can be goes like these, and like these. Then the pullback right here, would be my increasing lot position right here. Hey, let me see if you have more questions. Looks like sideways trend. Yes, because for different traders have different analysis and different opinions, that's for sure. For me, this kind of consolidation is a sideways trend. For here, it can be a sideways trend as well, but the moving average for 8 EMA and 30 EMA tells me that the current trend is still upwards. In that case, I still gonna hold my longing positions until it hits the top level of this range at this level right here at 190. Okay, let's switch back to 1 hour to see if there are some interesting paths happening right now. Okay, the market seems like they are still waiting for the PPI, which will the data will be released in 10 minutes at 8:30. The PPI, the monthly PPI, is a significant data as well. As we know, we have CPI yesterday. The forecast was 5% and the actual was 4.9, which is 0.1% below the forecast, which looks good for the Fed. And the PPI here, it's not as important as CPI, but it plays an important role in the economy as well. It basically means the change in the price of finished goods and services sold by producers, excluding food and energy. Let me see if I can find the previous was minus 0.5% and the forecast is 0.3%. If the actual is greater than the forecast, which in other words, if the actual is greater than 0.3%, that is basically good for currency, which is good for American dollar. But on the other hand, it's gonna be bad for the economy, it's gonna be bad for indices, and it's bad for gold, because the price of gold is always the other way of the American dollar. Okay, and actually yesterday's CPI data of 4.9% suggests that there is only a slight slowdown in inflation and continuing underlying price pressures, because it was only 0.1% below of the forecast. Okay, Oliver is talking about JD. Let's switch to JD to see how it goes. Wow, I do not even have to look at the earning report right now because the chart gives me information already. Let's switch to the daily chart to see the big picture to determine the current price movement. Well, personally speaking, the current trend right now is still downwards. Let me draw a path first. Okay, as you can see the path right here, right now, the current trend is still downwards. Even though the earnings might be good or even is better than the market forecast, I still do not gonna long JD. First of all, the trend tells me I should stick with the downwards trend right now. Secondly, there is another chance of consolidation of the current level, which would be between these two levels, between nearly 34 and the the top range would be 36. The price still does sideways trends in this particular range from 34 to 36. Usually I would not enter a position when there is a consolidation unless the price tells me which way it goes afterwards. It can either break through the top layer or the bottom layer of this range. Before that, I personally do not enter any kind of positions in such of market. See, after PPL, gold will up again. It sounds like that's a question mark. Okay, let's switch back to gold. Hey, my internet is stuck there. Let's just give him a little bit more time. So I cannot predict that whether after the data released, how the market will go. But from the big picture, I have got several factors that can help me to determine that by and large, the price of gold will keep going up in the short-term period. So, first of all, the inflation rate. The inflation rate, let's take an example of yesterday. Yesterday's CPI was 4.9%, although it was a little bit below 5%, but still the CPI was quite high, and in the meantime, it indicates that the inflation rate is still high. If we have a high PPL today, then I do not think the inflation rate will be going down soon in 2 months, let's say. And another factor that I would like to talk about is debt ceiling. The final date of the US debt ceiling decision is approaching, and US Treasury Secretary Janet Yellen has warned that the US government could default on its debt as early as the 1st of June if Congress does not raise the ceiling. The White House also warned that a default could cause serious damage to the US economy. If the debt ceiling issue turns into a debt crisis, gold could jump on risk aversion. In other words, people would go to buy more gold rather than either saving the money into the bank or buying some financial assets. For instance, stocks or indices or bonds. It is worth mentioning that the US government's fiscal deficit as a percentage of GDP continues to rise rapidly, and the worsening sovereign debt risk puts pressure on the dollar as well. From this perspective, gold is expected to rise further as well. And a technical default by the United States would not only weaken risk assets in the United States, but also hit safe assets such as treasury bonds, like I just mentioned before, which are expected to increase margin across the board. If markets view the default as a cross default, there could be a flight to gold and cryptos as well. Since cryptos and gold have many similarities, so you can just regard crypto as a replacement of gold. We just got the PPI right now. Is 0.2, which is lower than 0.3 as forecast. Let's switch gold to 5 minutes chart to see how it goes. Apparently the price of gold spurred to 189.6. I'm not sure if this chart is moving or not, but theoretically, since the PPI is a bit lower than the forecast, the price of gold would rise up. Let's see how QQQs goes. There is a long tail of Qs on the very top of this particular hourly chart, hourly candlestick right here. Okay. Like I just mentioned before, gold is more like a safe treasury when there is something bad happens in the United States. Even though 0.2% is below than 0.3, but still there are a lot of concerns among the US economy and even in the banking sector of the United States as well. Let's get back to the factors that could affect the price of gold. Another factor that I think is quite important is the Fed meeting. At the last Fed's meeting in May, the Fed raised interest rates by 25 basis points and removed a phrase from its statement that it expected some additional policy tightening may be appropriate, suggesting this could be the last resort. What do I mean by that is, according to the Fed's announcement, we can predict that by and large, this could be the final interest rate raise. And we are going to expect either there would be a interest rate cut in later of this year, or the interest rate will stay as high as 5% at the current level as well. So there is a really rare chance for Fed to raise its interest rate later this year. And I believe that against the background of the banking crisis, the intensification of the credit crunch in the US may lead to a rapid cooling of the US job market as well. The probability that the Fed will not raise interest rates in June is quite high, and thereafter is relatively high, I would say. Personally speaking, relatively high would be more appropriate. And there is a possibility of rate cuts within this year. There is another statistics as the 11th of May, CME's FedWatch tool showed that a 92.6% chance that the Fed would not raise its rates in June, and only 51.4% chance that it would start cutting rates in September. As we know, these two figures were very low at the very beginning of this year. but now, as you can see, a 92.6% would not raise rates, and 51.4% that will start to cut interest rate. That is a quick switch. Another thing about interest rate is Goldman and Barclays, both of them have advised clients to be wary of betting on a rate cut by the Federal Reserve this year to prepare for an unexpected drop in confidence. By and large, they are indicating that probably the high interest rate will hold for the rest of this year. And one of the Goldman strategists said that clients should buy some contracts for the December Fed meeting because they expect them to rise. And he added, historically, when the Fed has had a series of rate hikes, there have been 2 meetings where it has decided not to move rates at all. The most likely outcome in the next 6 months, then after last week's 10th successive rate rise, is that the Fed will hold fires. And that view is at odds with how loose the market is now pricing in for this year. Right, let's see if there is any questions. Okay. If it's possible, please share some ideas about this. Okay, not a problem. Let's see how it goes with this. Decent company. Whoa. as the chart tells me, the earnings report must not be that pleasing. Let me switch back to daily chart to see what it is doing right now. Apparently, the price of Disney is now at a range trading right now. We're at this level and this level. I would hold my fire like the Fed does at Disney this time, because from this past 2 to 3 months chart, the only thing that we can determine is the price does not move that much, or in other words, the price does not select its direction right now. After these trials, the price failed to break through this 103 level, and now it is dropped by nearly $2 from 103. At current price, it at in the middle of this particular trend range trade, so it can go either way. For my perspective, it can go either this way or that way. Since the market does not select its own direction, I will either wait or I will trade when the price approaches either the top layer of the range or the bottom layer of the range. For example, if the price goes here, then I probably gonna make a short selling position from 103 and set up my stop loss level a little bit higher than here, than this 200 EMA. So for this particular case, I use 200 EMA as my moving resistance line. It acts as my take loss level here as well. As you guys can predict, my target would be the bottom layer of this range, which is at 96.5. I'm probably gonna set up my take profit level a little bit upper, which is at 97. So now this particular trade risks for about $1.4, but the potential gain would be $6. It's 1 to 4 profit loss ratio. That sounds good to me. What do you say? Okay, I'm right. Gold will still raise. Alright, let me go back to gold. Great, thank you. No worries, Lily. You have a good day, and hopefully you are lucky in your trading as well. Okay, gold, it was strong right after PPI was released, but now it pulls back a bit. But still, I usually use 4 hours chart as my reference because it looks more useful and it looks more critical to me. Have a look at here. The 30 EMA now acts like my moving stop loss level or moving support levels. Every time the price tries to break through, but quickly it pulls back, and it's even going higher every single time when it pulls back from below of my 30 EMA. Look at here, it goes even higher. So that is my current short-term trading strategy. I would increase my lot size every single time when the price approaches my 30 EMA. What do I mean by that is more like this. Every time when the price hits or approaches my 30 EMA, I will increase, or I will just enter a new long-in position for GLD. And that is my current GLD trading plans. Okay. If you do not have any questions, let's get back to my affecting gold factors. Because I just got some more statistics that I would like to share with you guys. By the midday on Monday, the Fed funds futures market was pricing in just a 0.3% chance that the Fed would leave rates unchanged by December. A 49% 7.9% chance of a 75 basis point cut from the current level, and 27.5% of chance of a 50 basis point cut, according to CME's Fed Watch tool. And there is a 19.7% chance of a 100 basis point cut. 100 basis point cut sounds quite ridiculous to me, but you never know. The market sometimes can plays relatively rough. That could happen if that really happens. Okay. We'll just wait for the gold to move, because I am currently in favor of swing trade rather than a intraday trading. Therefore, once I set up my entry positions, my stop loss levels, my take profit levels, then there's not that much for me to do in this market right now. I would just read my materials, informations to see if there is any particular factor that would affect my trading decisions. Otherwise, I'll just do nothing. But at least I do not try to change my previously set up points. For example, my stop loss levels and take profits levels, because I tried to change those levels before and it hits me back. It hits me very badly. I lost quite a large amount of money, that just because I tried to hold the position for a longer time and do not want to stop my losses. As you know, as usual, finally my favorite account experienced a huge loss on that particular trade. After that, I tried to stick to my plan, especially those daily plans that were made by myself right before the market opens at 9:30. Okay. Some more information that I would like to share with you guys is what happened in Buffett and Munger's meeting. So at this year's Berkshire Hathaway annual meeting, shareholders predictably asked about the banking industry, which has drawn controversies not only from America, but also from the whole world, because it has a quite bad influence on the global economy right now already. For example, the economy of America and the price of gold, those are quite obvious price movement that we can notice right now. And the first question, the first part of those questions on Berkshire Hathaway's annual meeting was the impact on the U.S. economy if the deposits is about $250,000. And the second one would be what should we do about those bad influences. By and large, they are affected by the banking crisis, and there is obvious outcomes that would happen to the US economy and gold. All right, guys, I think the time is nearly there. Please feel free to leave your message and your question on the chatting sessions if you do have one. And there is my Discord link at the bottom of my screen. Please do not hesitate to join me or contact me if you do like me. And in the meantime, do not forget to subscribe my channel on YouTube. Thanks, guys, and probably we'll see you tomorrow at 8:30 as well. Bye for now then.